Assalamu alaikum student, welcome to in second week. Now we are with chapter number 2, and we will discuss about the basic financial statement. Remember, we will discuss it about their name just and some definitions. Yes, good. Think about this. What is the name of financial statement? Yes, that is the income statement. Very good. And second is the balance sheet, and third one is the statement of cash flow. In chapter number 1, we are discussing about the financial statement. Right now, just we are going to be discuss behalf of this chapter, detailed format of a financial statement, how we can make the balance sheet, which account and which head of account will be used, and which type of structures, column and rows, how we can make simply. And second is the income statement, which type of account we use it. We have read about different format, and we see the picture some that will be the something attractive for you people. It is a finally financial statement that is basically a accountant and a business need to be make it. And the before to go on a format of these things, first of all I will discuss about the chart of account. Your next slide is it is a related to. Now we move. And yes, first we think about the chart of account. Student, when we will make any company accounting information, if you want to develop a accounting system, if we want to make a company accounting system, whatever, in a software, in a manual accounting, that's not important. But in a both, first thing is that first primary important thing is that you need to be define the accounts. You need to be define the accounts, number of accounts. Okay, we have a number of account in accounting that you will be used, but according to the gap, general accepted accounting principle, we need to make the chart of accounts. Okay, we need to define the main header of our account, main head. We have five head of account. Okay, that will be useful in whole accounting, that will be help you to make the accounting information, accounting system. Fine. Now you can see, first one is the assets, the example of different assets like office equipment, computer equipment, you are building machinery, it may be your goodwill, bank account, petty cash, account receivable, stock inventory. Okay, it is an example of assets. And what are the asset? Okay, first we will define it in our next slides, and then again we will discuss about this kind of example, and I will uh, tell you about the some detail of accounts. Okay, assets. And the second important is a liability. What is a liability? It is a something, that's a liable amount. Okay, like if you're taking your business, take a loan, a credit card loan, any goods that will you not pay, that some account payable, income tax payable, payroll taxes, bank loan, and overdraft. That's the liability of a business. It is a second account. Okay, second head. And third is the equity. That's a owner invest amount. Whenever we start the business, owner will be invest in amount. The name of the account that will be represent the owner investment amount. We will tell the we will use the account capital, stock capital account. Okay, drawing current year earning, retained earning. your other income that will be included in all income that your customer give you the money about related to your services. If you are sell the product, then you can receive the money. That's all are count in an income. Okay, your income or a revenue. And the last and the five uh, head of our account is the cost of goods sold, and maybe you know the name of expenses. Fine. Now, your company, your business need to define the number of expenses that normally to use in your whole years, and maybe the more than 1 years. The name of these expenses, though normally in routine level you are doing your business, will be paid about some expenses. That's advertising expense, any bank charges, any bank fee, consultancy, depreciation, entertainment, insurance, office expense, rent, traveling, utilities, vehicle expenses, professional fee, payroll expenses. That's a number of expenses that a company bear in the form of to earn the revenue. Fine. These are students again. It's a one of an important chart of accounts in which that is few just number of accounts. You not be happy for this that total assets are just in these eight account are included, 8 to 9 account included in a asset, and the 5 to 6 account will be included in a liability. That depend on the size of company, but that's a mostly account label that's a mention on this chart of account. Again and again, you just keep in your mind one of more important thing. Whenever you are going to be make any company accounting information, and you are now be ready to want to make the accounting system. Okay, first thing is that you need to be define the chart of account. Okay, first thing is that you need to be define the chart of account. Fine class, it is a again chart of account that I am representing and sharing with you people: assets, liability, equity, income, and expenses. Fine. Now I will move in the next slides and discuss about the again basic financial statement. That will be one thing, most thing important. Be this your basic statement. How we can make this statement? Basically, we use assets, liability, equity, income, revenue, and expense. These five head will be used in your income statement, balance sheet, and statement of cash flow. With the help of these five head, you will be able to make your income statement and a balance sheet. Fine. Now we move on to next slides. Let me check. Yes, yes, guys. Again, that's the introduction to the financial statement. Again, we have three primary financial statement, and the name is the balance sheet, income statement, and statement of cash flow. We will use these for the corporate business that is describing, and maybe the next week we discuss about detail the type of businesses, but it is especially for the corporation business. Corporate business use these fundamental financial statement on behalf of the accounting. Okay, and the already we are already discussed in previous chapters our income statement that show the revenue and expense. We how much we earn from our business, what is the turnover of our business, income statement represented. And if we talk about the balance sheet, it is show the financial position. We have of the list of assets, list of liabilities, and the equity account. Balances of these accounts that will not be appear in an income statement but use in a balance sheet, just asset, liability, and equity. Okay, that show with the help of these three account we can be recognized about the financial position of a company. Fine. Last one is a statement of cash flow. Statement of cash flow, simply that's a ending statement and ending year statement. How much a company receive cash and how much he spend, a company spend its cash. Simply inflow and the outflow of cash. again. Okay, inflow and outflow of a cash. Okay, that's some definition that is, about definition. Now we will go on a one statement and balance sheet, income statement, and the statement of cash flow. We will select a one statement and view it, and try to understand about their accounts and their formation. Fine. Yes, now the starting point is the statement of financial position. The other name is the balance sheet. Look the slides carefully, and now you have can view the statement of a financial position. I mean, balance sheet of a company. Company name is given. Okay, Vagabond Travel Agency is the company name, statement of financial position. It is the name of a statement and the date that is making the I mean to an end, I mean to an end. In the last week, we are discussing many times your report should be a mean to an end. It is a mean to end. I mean to say you are going to be closed at December 31st, 2015. It is a closing accounting period in which you're providing and your accounting information, and you are discussing about the financial position of our business, okay, on December 31st, 2015. Fine. Now again, look at the what's inside the statement. Look, it's a I see that's a asset. Yes, that's a liability and honor equity. You can see that's the asset and the number of different assets. I mean, the different account that using in an asset like cash, like note receivables, and you see account receivable, supplies, office equipment, building line. That's the value of these account. I mean, cash is at 22,500. Okay, and the receivables, that's the note receivable, simple account receivable and note receivable. Maybe you have a confused about these account that is you are listening about the first time. Cash is a simple term. You know how much cash is whenever a businessman, I mean to say investor and a owner are investing money in a business, then we will count in a cash. Fine. We will using in the form of a cash. Okay, it is a just investment amount. If we're talking about the note receivable, it is the amount of a note receivable. The note receivable and the account receivable. What is the difference between note and account receivable? It is a similar difference, simple difference. Look like here you can see a note payable and account payable. you know Minor difference. It is a receivable and it is a payable, but both have a note and account name are the thing, that's something. But receivable and account payable, basically that's both account. These, I guess, not a both at the four account, both account of receivable, note receivable, and account receivable, and the both account of a note payable and account payable, that all are related to the credit. Okay, when your business is using the credit term, you know credit term, जिसको आप क्या बोलते हैं, उधार. Fine. It is a credit. Whenever you will be involved a credit term, maybe you are using for your business. I mean, if we talk about the account payable, account and a note payable, mean to say you are purchasing something from the any supplier, any vendor, and you didn't pay the money. Fine. It may be possible you are purchasing 20,000. You purchase anything related that's a 20,000, but you pay just 10,000, or maybe pay the 15,000, 5,000 the pending. Now you will write it. It is a account payable for me because the goods are 20,000, but I pay just a 15,000. The remaining 5,000 I need to be paid. Okay, that is a basic simple. That's a 5,000, and it is just a simple way. 10-20 days credit time. Okay, but If I'm talking about the land and a building, I think installment thing that I will pay more than 90 days. Okay, it is a just a difference between a 90 days. If you're using a credit limit at the time of a 90 days or more than 3 months, then you need to be make a note. Okay, it is a basically a promissory note in which your company letterhead, in which your third party, maybe your bank as a witness will be involved, and you will be signed the note. Okay, class, you will be sign a note, a stamp. You can use a stamp. Okay. So note payable, similarly note receivable. Receivable is simply you give services to your customer, you sell your product, but your customer not give you money. Okay, and so receivable, it is a company on amount, it is a company on amount, but in the hand of customer. Customer have a promise with the company that he will pay in future time. It may be 10 days, 20 days, 15 days, but not more than 90 days, or not more than 3 months. Okay, if the it is exceedingly 3 months, then again we will use the note receivable, not a account receivable. Fine. It is a difference between that I am discussing about the note receivable and account receivable. Hope so you will be understand. And now the supplies, it is a type of again asset. It is a equipment like machinery, look like we use a furniture machinery that we're using for the long term. Building, land, these are the some assets name, or what are the assets that maybe come in your mind. You have no idea about the asset definition, but you just watch, you can see the financial position statement, and how it will going to be made, like it is a asset, it is a liability, and name of the some liability account, and similarly it is a honor equity in which your capital stock and retained earnings are using. Okay, the main thing is that when why we say the balance sheet, look here, the total asset account is at 300,000. You can see it. Okay. Similarly, when we talk about the liability and honor equity, in this, it is also total is the 300,000. So we have the name of a balance sheet. Okay. Balance sheet, the sheet that is going to be balanced, it both sides are balanced. Okay. It is if it is the right side, it is the left side, and the title of account is the asset and liability, then you can make a equation here. I will discuss in later also. Asset is equal to liability plus honor equity, and how you can prove it, you can see there. Total asset is a 300,000, and liability and honor equity also have a 300,000. Okay, class. Now I will move on our next slides, and we discuss about detail in assets. So fine. Okay. Yes. Concept of a business entity. Business entity is a separate from the personal affair of its owner. That's something just about the corporate level of a business. Okay. At the corporate level, how we can going to be defined about the concept of a business, that simply it is related to your business entity, and the all business entity, and especially for the corporate business, it is a separate legal entity that have a separation from their owners. Okay, like now I'm discuss about the assets in detail. We are going to be discuss about the assets. Okay, okay, student. Now look, assets again, cash, note receivable, account receivable, supplies, office equipment, building, and land. Okay, these are basically whenever you will be start a business. First thing is that first, I mean, just you are going to be invest your money. If I'm talk about, I want to open a school system, a software house. Okay, if and I have just 1 million. Okay, you are investing the 1 million. What first thing that come in your mind 1 billion. First thing is that I need to be a purchase on a rented form, acquire some building, I mean office which from which I will can do the work. Fine. A building, land, it is a proper a business need. Okay, from which they are using the using their I mean they are going to provide. I mean if you are simple, you are going to be provide the service to your customer. Fine. Now, the if we talk about the land building of a school or as for the factory house and the building, it is also you need to be make if you are going to be open a school system. You know the classroom. You need to make a classroom. In classroom, you have some chairs. You have a teacher tables and a whiteboard and how a teacher can deliver the lecture. Okay, you need to make a complete structure of a classroom. You have some admin offices. You have some offices of your faculty. Okay, you have used a number of furniture and the land, building, offices, and machinery, any other thing that and I will do the advertising become and I will start the education or a lecture for the students. Okay, but most important have a to our client. Okay, then the thing come in my mind that it is basically my business resources, it is my economic resources that I will use these building, these rooms, these furnitures, okay, this land and get a benefit. Fine. So we finally going to be decide your assets are economic resources, business resources that are owned by a business and are expect to benefit future operation. Fine. Your assets are economic resources that a business acquire to take future benefit. That's the one of another definition. Fine. Assets are economic business resources that a business acquires to take future benefit. Fine. It is the assets, and now I'm going to discuss some rule about the assets, but in next slides, okay, and the next video. Fine, class. We will discuss again about the assets. Definition are clear right now, but according to the accounting principle of a asset, I will discuss in the next video. Okay, Allah Hafiz.